Welcome to the first episode of 2014. This is the weekly market wrap-up. While 2013 certainly ended with a bang, as all major indices closed up on multi-year highs. The question now is whether investors can hold on to these gains with the expectation of growth, or whether they should be looking to invest elsewhere. It wasn't a good start for the year for U.S. markets, with the Dow Jones Industrial losing over 135 points, and the S&P 500 and the Nasdaq giving up an average of 0.84% of valuation. Contributing to the decline was low volume and below expectation PMI numbers from China, an assessment that caught many investors off guard. Turning to Canadian stock markets, the TSX started off the year trading in the red. The index took a hit and is down 66.77 points, closing at 13,554 on Thursday. It wasn't all bad though, as the TSX Venture Exchange gained over 7 points on Thursday, closing at 939. So looking at the year ahead, will the bulls rule the market or will the bears take over this year? One indication is the first trading day omen. Over the past 4 years, the S&P 500 ended positively on the first day, and so did the year. And in 2008, the first trading day was down, and of course, the year was fully down. There is a very high correlation, nearly 90%, between what happens in the first 5 days of trading in January and what happens for the rest of the year. Now, while we can't guarantee future performance off of historical trends, stocks have been gaining under ambiguous monetary policy and dubious fundamentals. And now, with the Fed officially committed to taper, we anticipate a very slow year in equities and perhaps even a strong correction. Turning to currencies, the US dollar had a muted performance this week due to the holiday shortened trading, with the dollar index closing slightly above the 80.50 level. With the Fed tapering now very much on the books and many investors expecting 10-year yields to rise over the next few years, we anticipate the dollar index to trade in a range between 83 to 85 by the end of 2014. In contrast to the dollar index, the Japanese yen's performance was far more volatile, with the dollar-yen pair cracking the 105 mark before pulling back during Thursday's trading. While the yen was the standout currency of 2013 and will likely make headlines in 2014, don't expect the same fireworks from last year. The Japanese government will be more focused on structural reform and will look for sustainable growth as opposed to short-term shock and awe tactics. The euro-dollar pair slipped a few notches after briefly challenging the 138 level earlier in the week. The euro was a sleeper hit for 2013, gradually rising while major European stock markets recovered from a deflationary lull. However, the ride was tumultuous. In 2014, we can expect more stability as global central banks have solidified their forward-looking game plans, and ultimately, we should see the euro-dollar pair challenge the 145 level by year's end. Let's turn now to winners and losers and our picks for the week. The winner for this week is Hertz Global Holdings, ticker symbol HTZ. Shares jumped up over 10% on New Year's Eve as Hertz announced a one-year shareholders' rights plan, which is a strategy designed to protect against hostile takeover. Overall, shares gained more than 75% on the year, led by management initiatives to expand their off-airport business and the introduction of new brands. On the books, Hertz saw a significant improvement in gross margins and net earnings. The loser for this week is retailer Zale Corporation, ticker symbol ZLC. Shares dropped 4.42% to end the year on a negative, as investors took profits off the table on what has been a very wild ride in a very discretionary sector. Although the company has seen retail comps improve in its most recent quarterly report, Zale shares are on paper extremely expensive, trading at 60 times earnings. All right, that's enough about this week. Let's turn now to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up is Micron Technology, with their earnings report coming out on Tuesday with an EPS forecast of 43 cents. In 2013, Micron was the darling of both the Nasdaq and the S&P 500, with a whopping 256% increase in value over the year. Let's see if they can exceed forecasts on Tuesday. Next up on Wednesday, Monsanto releases their earnings report with an EPS estimate of 65 cents. The St. Louis-based company recently teamed up with Novozymes on a long-term strategic alliance to transform research and commercialization of sustainable microbial products that will provide a new platform of solutions for growers around the world. On Thursday, Alcoa releases its earnings report with an EPS forecast of 6 cents. And on Friday, American Express is out with an EPS forecast of $1.27. Okay, checking in on Canadian stocks to watch next week. First up is ComDev International with their earnings report out on Monday with an EPS forecast of 7 cents. The Cambridge, Ontario-based company is a designer, manufacturer, and distributor of space communications and space science products and systems. Up on Thursday is Nordion Inc. with an EPS forecast of 21 cents. And on Friday, it's Big Media's turn with Postmedia Network up first with an EPS forecast of 21 cents. Finally, on Friday is Shaw Communications with an EPS forecast of 49 cents. Based in Calgary, Shaw serves over 3.3 million customers, providing cable, broadband internet, and direct-to-home satellite. They also own Canada's largest television network, Global, and 18 specialty cable channels. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street and BayStreet.ca, I'm Hannah Bernard.